Wipro numbers have come out and they've really come out rather early this time. 1610 on a consolidated basis. This is a good solid 80-90 crores above the ET Now poll or the ET Now estimates. So what really has done the trick for Wipro? Because Q1 numbers are very ordinary. So what has changed for Wipro in between quarters, which has really boosted their bottom line by 90 crores? We need to figure that one out. I think it has to be operating profit margins, or maybe the fact that the telecom business, which was a big impediment for Wipro, maybe that business has managed to turn around. But like we've been maintaining, that for Wipro, the game has changed now. Historically, markets have always reacted to their IT services revenue guidance, and based on that number, analysts have derated or re-rated that stock now. But the fact that now there are multiple triggers for Wipro in the near term, you have to approach the Wipro stock price with a different, with a different outlook. Q2 revenue 1.54 versus ET Now poll of 1.54. So revenue is in line with estimates. So either there is some kind of an extraordinary gain, or maybe for the quarter gone by, which is Q2, operating profit margins have expanded. That's the number. 610 versus ET Now poll of 1521, which is a good solid 90 crore above estimates.
Just want to read out Asim Premji's comment on the results and the business going forward. We have chartered a new course for demerging our diversified non-IT businesses. I am confident that the demerger will enhance value for all stakeholders and provide fresh momentum for growth for each of our businesses. So I think the talking point really this earnings is not so much about what the IT business is doing, but really the sum of part valuations, which encompasses the value of the FMCG business which they're doing.
Yes, indeed, because the IT business, the P multiple for the IT business is about 12-13 times, because large cap IT businesses are struggling. The average industry P multiple for FMCG is way above 20 times. Now Wipro is has a sizable presence in the FMCG business. I mean, they've got big brands like Yardley. 2-3 years ago they went and acquired an Indonesian firm called Unza as well. So this demerger for sure will help create a lot of shareholder value. But I'm just trying to understand what is happening to the IT services, and my understanding is that in between quarters the IT services as a business has managed to register a growth of about 4% plus. Now that's sizable, because Infosys in between quarters has managed to clock a run rate of only 2.6%. TCS, which has a large base and which is a growing business, TCS has reported an in-between quarterly jump of about 4% plus. So if I analyze the top four, surprise, surprise, honestly, but Wipro is right at the top there. 1.54 versus ET Now poll of 1.54. So revenue is in line. Q3 revenue from IT services to be in the range of about 1.56. I missed the second part. That's the guidance, the most important operating part.
1.56 to 1.59.
1.56 to 1.59. That's not much.
That's
not much. Which means for Q3 they are projecting a flat quarter. So numbers are volatile. Q1 was flat. So in between Q4 and Q1, nothing exceptionally strong came out. The Q2 guidance was okay, but they managed to beat the ET Now poll in terms of a bottom line estimate. But if I look at the Q3 IT services guidance, which is for the current quarter, 1.54 becomes 1.56, and the range is about 1.56 to 1.59. So even if they grow at the upper end of the range, that's not more than 2.5 to 3%. I mean, for the stock to get re-rated, or for the IT services to get re-rated, you have to beat TCS, because TCS has raised the bar. Tanveer, on a standalone basis, there's nothing wrong with these numbers. On a large base, they're growing. But in markets, it's not about absolute. It's always about relative. And the relative performance bar because of TCS has gone so high that Infosys and Wipro are now just struggling to keep pace at TCS.
And whatever is left is taken over by HCL Tech.
Exactly.
So the pie is really getting readjusted.
Well, guidance they have given out is the 0.5% to roughly about 3% growth, which is slightly lower than what Street was expecting. Street was expecting 2 to 4% kind of guidance. Remember, if they have to finish the year with 7 to 8% kind of growth in revenue in dollar terms, so they have to do a back-ended kind of growth for in Q3 and Q4. So the expectation was that they will give a guidance of roughly about 2 to 4%. So this is slightly lower than expected, but it might include impact of Sandy storm, which most of the analysts were not expecting. So that could also be one of the reasons. But as far as the September quarter numbers are concerned, top line for IT revenues is absolutely in line with expectations, but EBIT margins have performed better than what we were expecting. Remember, this was a quarter when the full quarter of salary hike would have be expected. So we were expecting margins to decline by 120 basis points, while the margins have declined only by 30 basis points. So they have performed very well as far as operational performance is concerned. But if you look at, so that is the reason why the net profit has come slightly higher than what we were expecting. So that's the reason for the beat as far as the net profit is concerned. But if you look at the guidance is slightly disappointing, because 0.5% growth is not what Street is would be happy about. Anything below 2% would be seen as very, very negative for Wipro. Going forward also, there was expectation that they will announce some big deals in this quarter. They have only announced one signing with Qatar Airways in this quarter. So we'll have to wait and see what the management commentary is, whether the deal wins are expected to improve going forward, and whether that can translate into revenue growth in Q4, because Q3 clearly they're not expecting much growth to come in Q3. So disappointing as far as the guidance is concerned, but they have beaten the EBIT margin and the net profit for this quarter.